What the hell is going on, YouTubers? Today I want to talk to you guys about how I made about $670 in passive income through dividend investing, and how I've actually made over $2,500 this year so far, and how I'm forecasting we're going to get around $3,300, $3,400 before the year is up. Uh, I've also technically made about $50 to $60 in September income from YouTube. I didn't make a lot of videos this month, so my income has dropped a little bit. But hopefully, with the next couple of weeks or so, I'll be able to increase some video content for you guys and increase maybe a total portfolio update, what have you. But anyway, uh, basically, the coolest part about this is I looking at it from 2016 to 2017, I've already increased my income monthly on an average monthly basis, rather, by about $101 uh, per month, which is pretty phenomenal. My goal, my internal goal, or my high expectation goal was to get to $300 a month in 2017. Now, of course, in 2018, I'm way going to blow past that. I'm already forecasting about $330 a month, and that's without any further invested capital. But and that's already a 22% increase from 2017. But 2017 over 2016 was a 60% increase. So that's pretty good considering last year, from 2015 to 2016, it was a 71% increase. So the fact that I was able to almost match that is pretty substantial, considering in order to keep up with this dividend growth, you need to invest a lot more capital every single time. So just in perspective, uh, I invested and got $69 of increase, which got me 71%. This year I invested and got $100 increase a month, and it was only a 60% increase year over year. So um, I think you guys are well aware. My 2018 target is to get $4,800 for the year. That might be light. That might be too much. But that'll get me the $400 a month dividend mark, and that's pretty amazing, in my opinion. Um, but what that's going to require out of me is to invest another 20 or so thousand dollars in capital, to get that extra 70 or so dollars that I need on a monthly basis to break that 4,800. Now, like I said, I'm already anticipating getting about 3,900 in strictly dividends. That's not including anything from YouTube, which is pretty substantial. I mean, a lot of $4,800 at the end of the day, I'll probably clear about $4,000 after taxes and whatnot. That's pretty substantial. That's getting to the point where I can invest $1,000 every quarter into new funds, or $1,000 into potentially purchasing some rental property or something along those lines. So it's getting to the point now where 2018 is a big year where I could make a pivot point and continue on this dividend path, which I think is the most passive and easiest way for me to make money. But at the same time, it's the most passive way, I should say, of getting passive income. Maybe not the best way, however. I think that there's potential ways or potential places where I could be more risky with my investing and get a lot more return. But from what I know and from a gut feel perspective, I feel comfortable investing in these dividend growth stocks. Um, and some that I haven't been returning how much I thought they would, like Skyworks Solutions and Suncor Energy. I just sold about 2 days ago, on Thursday of last week. So uh, I'm not afraid to get rid of some stocks if necessary. But it is pretty impressive that I was able to get around $700. I'd actually recorded and confirmed every single one of these transactions, which is why they're yellow. And I figured that was way too boring for you guys. You just sit there and be an accountant with me and just double check that everything comes and makes sense. I mean, you guys probably already know what type of what exactly I own. With respect to all these different stocks, I need to update this and get rid of Suncor and whatnot. But how many shares of each I have? Wells Fargo, 115, 100. I'm trying to get to the 100 range with a lot of these stocks, like my Realty Income Corp, and so with respect to that, it's really starting to show when these things pay on either a monthly basis or quarterly basis when you get to the $100 mark. Like my Royal Dutch Shell. It's actually interesting enough. They pay you reinvested dividends in RDSA, which is actually on the London Stock Exchange, or so you have to actually pay income tax on this or whatever. But interesting enough, different story for a different day. But I think the biggest headline for me was Seadrill Partners rather actually ended up paying a dividend, and that's what I think really pushed me over the top. Without this, I would have been a regular $550 a month, which I think I had gotten not too long ago. In June timeframe, I got 476. So with my income from YouTube, it pushed me over the $400 range. But this Seadrill partnership finally coming through with 2 quarters of dividends payments, and then obviously my semi-annual dividend payment from BHP, and then obviously Royal Dutch Shell. Between those three, really allowed me to go over the edge. So between those three, I was able to get just $300 alone. But now I'm really curious as to what the total value is of those positions. So if you just bear with me really quickly. So that my shell. So let me zoom over here. My shell is over here. It's about 3,500. My Seadrill is about 1,600, and then my BHP is about 4,000. So that $300 in dividends came from about $9,200 in total invested capital. Now this $100 is going to come from Seadrill. Oh, I'm sorry, did I do the wrong one? Oops, I did. Anyway, maybe it's more than that. Sorry, it's $6,000, 1,500, and 4,000. So it's probably like more like 1,100, 11,000, 12,000. Sorry about that. But that $100 is coming from Shell every single quarter. Seadrill is hopefully going to continue their $50 or so payments every quarter. Like I said, they delayed and actually paid 2 dividend payments this past quarter, which is why it was $100. And then BHP, man, they're continuing their 40% minimum payout ratio. I think this ended up being about 50-60% payout ratio, which I'm perfectly fine with. They're getting their debt down. I'm cool with that. I don't mind. I don't expect a company to pay me if they're not making any money, but when they're making money, I expect them to pay me. So that's, I don't mind the 40% payout ratio. Some people might say, well, I'm young, so I don't need a consistent dividend payment. As long as I get some sort of dividend payments that I can reinvest, that's fine with me. But that'll get me about $200 a year in dividends from BHP as well. So these are pretty good holdings that I might keep for a while. My Seadrill Partners, as you guys probably know, is my almost a gambling stock at this point. I'm thinking that I'm down a good bit on it. Actually, I think it's probably up to like 350 at this point. So I'm only down about 25%. I only have purchased 450 shares now because of reinvestment. I'm at 522 shares, but my hope is that this goes back up to $10, $15 a share like it was before the oil collapse, and then I'll be sitting pretty, and I'll be able to sell a couple shares or just keep it because the dividend before was about $1 a share, and or actually even more than that. I think it was like 50 cents a quarter or something like that. So if it goes to that, then I'll be making close to $1,000 a year just from Seadrill, which will be just under 40% of what my original investment was. But of course, that's a long ways away, and it could also very well go bankrupt. There's the possibility of that as well. But anyway, I would really love to hear your guys' suggestions. One of the things that's been on my mind is now that I'm getting to the point where I am getting around $300 a month in dividends on an average basis, I'm starting to think whether or not I should pool my dividends, meaning instead of automatically reinvest them like I currently do, selectively reinvest those dividends and wait for, say, a dip in either the market itself or an asset or new shares that I don't have anything in, or wait for, say, Realty Income Court to drop to like $59 or $49 and be like, that's a great deal, I'm gonna purchase now, sort of deal, instead of automatically reinvesting, because my reinvestment for Realty Income Corp this month was like $57, and that's not horrible. It was like $72, not too long ago, but I don't know. A lot of people have uh, different ideas as to what is the right way to go. I've heard people say, "Oh, only pool your dividends and invest selectively," and then I've heard some people to say, buy shares, reinvest the dividends, and forget it. Anyway, I would love to hear your guys' comment on that, because currently I just reinvest everything, and I think I'm getting to the point where, with added capital that I have every month, I think I add, about $400 to $500 every paycheck that I get to my individual brokerage account, and obviously any leftovers at the end of the month. So if I get, say $1,000 every quarter, you're looking at $3,000 to $4,000 that I'm able to, invest every quarter, at a minimum, not including bonuses and stuff like that. Um, so instead of investing them in something that might be overpriced or whatnot, I'd be able to invest it in something that is probably a lot less overvalued potentially. So that could be like Phillips 66 right now. I haven't updated this, so Phillips 66, for instance, is like $90 at the moment. If you look at the actual ticker price, um, which is near a 52-week high. So would reinvesting in Phillips 66 be a good idea when either A, already up 25% or more, or what have you? So it's just a thought. I would like to hear your guys' suggestion as to what you do, or if you were in my shoes, what you would do. You could be very well a couple years behind me or ahead of me with respect to your dividend growth portfolio, and either made a switch at a certain point or have been thinking about making the switch. I'd love to have the conversation. And then obviously, I mentioned this a little bit earlier, I think, with respect to potentially selling some of this off and maybe getting into real estate, getting a rental, um, putting a down payment towards that, uh, and saving up a little bit for the next couple months, and purchasing a down payment on a house for renting. Not, I'll continue to rent myself an apartment, so I can remain flexible, but purchasing a actual rental house or duplex or triplex, so that I would be able to get into that potential game with respect to real estate while interest rates are down, right? But anyway, there's a lot of paths I could take. I'm just really excited, and uh, that I'm able to sit here in front of you guys and say that I was easily able to make $700 in passive income within 3 or 4 years of, actually just over 4 years of working full time. Um, $700. If I was able to take all that out, it wasn't my IRA or anything like that. $700 is a lot of money, man. I mean, if you think about it, I could technically take this 300 and so dollars. Actually, ended up being about 400 if you take in the computer share amount. $400. That's a couple nights out. That's a nice steak dinner at like Perry's or Delmonico's, or no, what is it? Correct. Vic and Anthony's. Yeah, that's another good steakhouse there. Or that's a nice box of cigars, But at the end of the day, I have other money that I use to buy my boxes of cigars, so I'm not hurting for this money. But that's a cell phone bill. That's almost all my car payment, which is almost paid off. So um, that'll be more money than I'm able to invest. A couple $100 more I'm able to invest a month. But you know, it's anything that I'm able to contribute so that I don't necessarily have to work a 9 to 5 for the rest of my life is pretty awesome. So glad I'm able to share this journey with you guys. Love talking to you guys. I love sharing this. Leave any suggestions that you guys have, and I'll talk to you guys soon. Have a great weekend.